Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Thursday, and we're at the 13th of July, 2023, time 6:05 p.m. Central Time. More of the vertical price rise going on in the stock market, dollar breaking down again, 73 points. Here you are at 99. Will you be going to the 98, 96 level is now the next questions in the market. You might find a little bit of support here because you're getting oversold and you get a bounce, but overall the trend, the back of the dollar broken. And the big trade will be being short the dollar for a long time to come, I think. So we'll see what goes on there. That would help the gold market. You can see the yen has had big bids. It's back up to the 73 level. This is a market you were talking, did it need intervention just a month ago? And obviously not. So let's take a look, if we could, at what's going on. First, I have been waiting to see if gold can get up and challenge the 18-week moving average. That is this red line. The number's now 1970, 270. That'll be where the battleground, as I see it, comes in. The next is the gold market in the bar chart daily. As you can see, the market has come up here almost like a saucer. Is it going to leak back down for a correction and then move up again, or what's going to happen? I don't think it'll just blast off, but it could, but I don't see that. You've got higher highs, higher lows, bullish. The market is over the 18-day average of closes, now 4 days, bullish. The market has resistance at the upper Bollinger Band, and you tell me the numbers you went to today. High 1968.5, Bollinger Band 1966.90, and now you're getting the market that's backing off and saying to itself, what do I do next? Why? Because at the same time you're overbought. If you had an embedded reading whereby the red and the blue lines are going sideways over 80, I'd say it's launch time even further. You don't have that. So somewhere between here, the Bollinger Band, and the 1975-80 zone, the 100-day average, is where I think the big battle goes. It could be a reason to come out of longs, but eventually I'm going to be telling you I think you still buy. In other words, I'm in the bull camp in the gold. You'd have to get under the current pattern back under 1918 in order to violate that. I don't see that coming. When I look at the silver-gold ratio, the easier play was the silver. I've said that if you watch that ratio, it gives you the ideas. Look at how silver's cleared everything. Now, if you've taken my enhanced Bollinger Band course, if you learned anything, number one, you don't buy over Bollinger Bands. First thing. Number two, you're always looking to see, are you overbought or oversold? You are overbought. You've extended the market. I wish I could tell you I know how high it's going to go before it peaks, but it's ready. It's ready to move to the right-hand side of the Bollinger Band. At what time? I don't know. Am I bearish? Clearly not. But you could never get me to tell you to buy a market that is overbought and over the Bollinger Band. I'll let somebody else carry that risk, and that's how I would trade that. In the copper market, everything, a rising sea, the tide, if you will, picks all ships up, and that's what's happened here. Now, you are in big-time resistance in the copper. You are up to the 100-day average, the upper Bollinger Band. So you're getting a theme here. This rally's approaching resistance points. All of the metals so far are in uptrends. They're all in overbought condition. Common theme. Do you have any difference in the platinum? Absolutely not. You're up to the upper band. You're now going to fight if you keep going higher. The 200 to 100-day average. I'm looking for a lot of resistance. And no, if you were to call me and we had a conversation on the phone, Ira, are you bullish the metals? Absolutely. Is this the entry spot? No. That's all I'd be telling you. I'm waiting to see what the market will do on the breaks. Could you have caught this move? Yeah, but you had to get long under the 18-day average. You had to bet that the jobs report was going to come in a certain way, which was very bullish. And then you had to bet again that the CPI. Those are not type of bets I don't like to take. I know people take them. I know they won with them. I congratulate them. But for every long, there's a short. And there's a lot of people caught in this market, and that's what's propelling it right now. The people caught, not the new buyers or sellers, is what I think is propelling it. In the dollar, you've got 2 days under the Bollinger Band. One more day, you would get what we call the gorilla glue trade. And what that is it's when the market latches on to the Bollinger Band, and I'm looking here to see, do I have any others that are like it? There isn't one on the chart. It's when the market latches on and hits day after day after day the Bollinger Band, and in the process, it widens things out. Now, this came from a sideways action, not a real long-term one, but one that's important. You also had one up here. When the market starts getting those, gold has a tendency to move away very quickly. And that's what not gold, the dollar, move away quickly up or down. In this case, to the downside. Let it run this wave of the course. It's oversold. It'll get itself overdone. For whatever reasons will come, you'll get short covering rally, profit taking, whatever, or consolidation. You'll have another chance in. That is the point that I'm making. There's always another bus, train. There's another trade right around the corner. Never worry about what you're not in. To get involved in that trade, you had to take risks that I would have told you not to take. Would I have been wrong on a trade? No, not participating. One of the things you should be looking at now is the pivot points, especially over the next few days. Markets that get stretched out commonly refer to and use of pivot points or pro traders that I've seen for years. This is where they pull out their book and they start looking. You find a center line on the chart. The formula's in your computers probably on your charting software. The key is to learn that, but not just learn it on its own. The chart will look like this. You're going to have a pivot point in the center. You're going to have two numbers above. I've seen them as high as 4 or 5. Currency traders like to extend them out even further. But from there, you're looking at a sell zone and another sell zone. Now, how do you know which one to go into, use, and so on and so forth? Well, that's where I tie, which is what's different, my slow stochastics, the way that, number one, my formula for them, number two, the way that I use them with it. And I use that for the timing. I'm in a buy or a sell zone. I have an embedded reading. It's lost. The market's moving. I have a market that's overbought. Even though I've got myself a sell here and overbought, I'm going to correct that and I'm going to stay stronger. So you start putting together the thought process. And I explain it in the whole video, teach how to do it. And folks, it's free. I want to introduce you to the way I teach charting. So go to iraepstein.com. You can also move your cursor to the top here. It'll take you there. It's under the free offers area. Sign up for it. We'll get everything sent to you. It'll come to you via links. Just open them up and away you go. I'm Ira. You have a good evening.